What's up, guys? It's Rey-Jay back with another video, and in this one I want to break down what's happening with SPY, Tesla, and the overall market. I'm also going to break down what's going on with some new developments on the charts and what's going on with some new catalysts that are also coming out. But just note that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed 15 in total, not to mention 8.1% APY on uninvested cash. This offer ends very soon in just a couple of weeks, so check it out before they run out. Anyways, now let's talk about the market. So I just wanted to say that the market saw this big rally this week as SPY ended up forming this bottom at this 540 area, and since then we've been continuing to just uptrend as time has gone on. But the question is, are we about to see a big rug pull, or is SPY about to continue to rally? I'm going to give you guys some more insights about this over the next couple of minutes. So one thing worth mentioning is that on SPY, we technically have a nice cup and handle like structure. This looks like a nice cup. This looks like a handle. But in order for this to play out, we have to break past this resistance. And the question is, can we do that? Well, for the time being, I think it's going to be very difficult because every time SPY hits 563 to 565 historically, we reject it. It's been very, very tough to break that area. And I think that we might not get the break immediately. It may need a very, very big catalyst to do that. And we have one catalyst coming up that's going to be the FOMC meeting. So we'll have to be watching to see if that could help us out. So if we look at the chart like this, you guys could see that we've been riding this trend line like up for quite some time as SPY continues to rally as time progresses. I just want to say that I wouldn't be surprised if we do have some like consolidation up here just to start off the week. But then even if we do get a little bit of a dip to retest this trend line, we retest like the high 550s, we could just continue to rally back up and just go back and forth for the next 2.5 days. And then, like I was about to say, the big catalyst is going to be FOMC. We're going to have the Fed making their interest rate hike decision, whether they give us a 50 basis point cut or if it's a 25 basis point cut. We'll have to watch and see. There's a 100% chance we get some kind of cuts, and we'll be watching that very carefully. Their interest rate projections are also very important to see to what extent they're planning on cutting. I think that's going to be another very, very big catalyst. So, right now, the market thinks there's a 50% chance we get a 25 basis point cut and a 50% chance we get a 50 basis point cut. If Jerome Powell announces and if the decision comes out for that the overall Fed is going to be giving us a 50 basis point cut, okay, I think the market's going to rally really hard. I think we could be looking for new all-time highs for the S&P 500. All right? Most likely that is going to be a very, very big catalyst. But if they give us a 25 basis point cut, I think that the market will have kind of like a nuanced reaction to this initially. It could still rally a bit, but whether or not we get a bigger rally will depend on what Jerome Powell says. So, in that case, if we get 25 basis points, the market will pay more attention to what Jerome Powell says. If Jerome Powell says that, hey, there's more potential cuts coming in store, inflation has been dropping really hard, if he starts talking about how the Fed has made a lot of progress, they have more potential cuts coming, and they're potentially looking at a new easing cycle. So, an easing of monetary policy. They've been tightening for the past couple of years. And as of recent, they've been kind of like pausing on increasing rates. They've been waiting. And now, if they're shifting their overall plan in a way where they're about to start this easing cycle, that's going to be a very bullish catalyst for the market, at least for the short term. Now, people oftentimes say, hey, when the Fed cuts, how come the market isn't going to crash, right? Doesn't the market crash when the Fed cuts? The answer is not necessarily, because correlation does not mean causation. So just because the Fed cuts and that you notice that historically leads to a crash, it doesn't necessarily mean that the cut is what's going to cause the crash. It has to do with the external factors of the economy, whether there's a housing bubble that's popping, whether there's a black swan event, a dot-com bubble, or some kind of recession. So what could be happening, and this is just a theory, is interest rates have been elevated for so long, and because of how much liquidity the Fed pumped into the systems, it led to basically our economy looking very, very strong, at least on paper, for a long time. But behind closed doors, there's a lot else that's going on. And then what's happening is the recession is coming, but it's very delayed. It's taking its time to officially be announced, not until like early 2025. So what could be happening is the market may rally, approaching October. If we get a nice cut and the Fed tells us about how they're easing on policy. And then there could be a pullback in October. That's still very possible thanks to seasonality. But but November and December after the election could still be very, very bullish months. And the market could even rally into early next year. And then the real rug pull could come when the recession ends up really hitting. Because just because the Fed is cutting doesn't mean that the economy is going to get all good. Okay. The damage has been done and it's very delayed. When the Fed raises rates, the damage is still affecting the economy. You guys are seeing that the unemployment numbers are starting to go up. It took time for that to happen. It's very delayed. So when they start cutting, there's not going to be an immediate effect on the economy. It's going to take many, many months until we start to see things start easing, which implies that the recession is still coming most likely. There's going to be a big contraction. And I think that the market is going to rally temporarily. It could even rally into early next year. It could happen, right? With the exception being October, where there could be a big rug pull. But remember, when that recession comes, there could still be another big rug pull early next year. I just think it's going to be more delayed than what a lot of people are expecting. Now, what about seasonality, right? If you look at us during all these election years, the market has that tendency of kind of basically we tend to push in like August. We didn't really get it that way. We actually saw the market remain quite bearish in August before trying to make a nice recovery so far. But instead of getting this rug pull, a rally, and then a big rug pull again in October, I don't think it's going to happen that way. I think that the market may continue to hold up, consolidate, maybe even try to rally approaching October. And then seasonality suggests that there could be that pullback coming in October, which I think may end up being very favorable. So to me, one of the reasons why I think that there could be a rally coming is because of the Fed and because of the fact that we have this cup and handle like structure, and also because of the shorts. So let me explain. So SPY may do something like this, right? So every time we hit 563 to 565, we kind of reject. We could initially see a little bit of a dip like this, come back up for the first couple of days of the week going into next week. And then when FOMC comes, if the Fed announces a 50 basis point cut, we could start to rally. If they give us 25 basis points, but they end up announcing that, hey, they're going to continue this easing cycle, I think we could be rallying to new all time highs, and this cup and handle could end up playing out. And we may continue to remain bullish for even like a week after FOMC and just continue to push going into October. And then we could get the rug pull. We could get a little, correction, a pullback in October, maybe delayed. Why do I think we could rally? One other reason is because of the put and call option ratio. For the last couple of weeks, people have been piling into shorts. Look at the 5-day average of the put to call ratio. People are continuing to buy puts, believing the market's going to crash, getting ready for the September crash. We're doing the exact opposite. Whereas the September crash, so far we started off with a little bit of a dip for 1 week and we've been rallying so far, right? And we're near all-time highs again. So that's how crazy it is when everyone's trying to short the market. Also, look at the ratios for puts and calls for SPY. Okay, September 20th, we have a little bit over a million or 1.1 million calls expiring. Then we have over 3.15 million puts expiring at 2.84 put to call ratio. 3 million plus 3 million plus puts expiring, excuse me guys, are going to be happening on September 20th. So 3 million of these puts are expiring. That's crazy. And then check this out. September 27th, the Friday after that, we have about 90,000 calls expiring, and we have about 678,000 puts expiring. A 7.14 put to call ratio. That's insane. So people are betting. There's going to be a crash coming. The crash is coming. They're buying puts. Yes, I think the market could dip a little bit, but we might not get the big dump until October. They may have to wait it out for quite some time. So with all these puts expiring, we don't have to worry too much about September 27th. For now, we're just going to focus on September 20th for this week. There's so many puts expiring. People are betting the market's going to crash. No, guys. Okay. We might see a strong end to the week because of FOMC instead, and they may try to squeeze shorts even more. This would be more advantageous for market makers. We have a nice cup and handle. It's another confluence. We look strong on the weekly. The Fed's going to cut, and the market loves it. I think that the odds favor that if Jerome Powell does give us what we want to hear, and he says that the Fed is about to enter an easing cycle, and he continues to remain very optimistic, the market could continue this rally just temporarily. We could slow down in October, and we may not get a bigger correction until next year, early next year when the recession comes. But for now, the market is responding more positively because think about a company like Tesla. These high interest rates are slowing down their deliveries. It's making things harder for companies like Tesla. Tesla will have an easier time when interest rates start going down, and over time, it's going to benefit them. The same thing goes on for all these different tech stocks, all these different companies out there, which have been looking at contracting earnings. What about the QQQ? Well, the QQQ looks bullish on the shorter term time frames, but notice this. First off, we have a tough resistance right over here. I'm going to be looking and eyeing this like trend line, just like this. I think that this could be one of our main supports, maybe a little bit lower. So what I think could be happening is when you look at the QQQ on the 4 hour, we are attempting to push higher. And if you look at the daily charts, we have a very, very key resistance to watch for. I would say I'm going to be looking at this 480 area. That's going to be our first key level. Where's my horizontal line? So right here, this is going to be a little bit tough to crack past. If Jerome Powell pumps us through that, I'll be looking for basically this imbalance, 485. If that breaks, I think we go to gap resistance at 488. And eventually that gap fill takes us all the way up to almost 500. I think we will go close to 500 if we end up breaking 488. So if you look at this, I think that we could also do something like this where we kind of dip on Monday, retest this trend line. Tuesday, we just kind of consolidate. And then after FOMC, if Jerome Powell gives us the cut, and he ends up talking about how the Fed is entering an easing cycle, or if they just straight up give us 50 basis points of a cut, the market's going to just continue to rally to some of these resistance levels easily to, I would say, the 485 area. I think that's very favorable. Will we break through that? It all depends if we could try to get up to this gap fill. Could we rally back up here and then start to slow down as we get back into October for a little bit of a dip? We'll see. But for now, we look more bullish. It looks like we're getting ready for a big bullish move. And you guys have to remember the market could just keep going. It's a very, very crazy market full of manipulation just to hurt a lot of people. How about Tesla? I'm going to be very quick with this one. Tesla, we're going to start off with the 4 hour time frame. It's very obvious there's an inverse head and shoulders like structure. If Tesla could crack past 235, I think we squeeze up to 245 to 250. I think there's a good chance of us potentially achieving that. I think there's a lot of potential in this nonetheless. There's an inverse head and shoulders on the 4 hour time frame. On the daily time frame, we have a nice inverse head and shoulders as well. If we break 235, we're looking for that gap fill all the way up towards 246 and eventually 250, right? And then we also have a nice inverse head and shoulders on the bigger time frame. If you look at the daily and kind of like zoom out, you guys can quite clearly see this looks like a giant inverse head and shoulders. So if Jerome Powell causes a pump and Tesla breaks 235, we're looking for that gap fill, a nice rally off the inverse head and shoulders. Tesla loves to bounce off these inverse head and shoulders. It loves to do that. Historically, you can look back at the trend, you see that all the time. So that's one of its favorite patterns. So I think there's a good chance that this tries to continue to push. Now, another catalyst is going to be their deliveries coming out on October 2nd. That's quite a distance away from now. That's like 2 weeks away over. So I'm not as worried about that. For now, we're just focused on FOMC. If Tesla rallies with the markets, we're going to be looking for that gap fill. If we could break 235. Also, interest rate cuts will greatly benefit Tesla. It's very sensitive to interest rates. So when cuts start coming, it's going to be easing on policy, and that's going to be easing things for Tesla as well. So to me, it's another very, very good catalyst. I just want to call that out. But with that being said, guys, I think I'll just conclude the video from here. I might say the market will for sure rally. I can't promise it, but the setups do look very bullish. And on top of this, you have to consider the fact that we have a nice cup and handle on SPY. And a lot of people, the majority of people are shorting the market for the week. If you look at the Friday put to call option ratio, and also what's happening with the puts and call option ratio for the 5-day average, it's still pretty elevated. So to me, it seems like it's more advantageous for these shorts to get squeezed and for Jerome Powell to announce that the Fed is going to be starting this cutting cycle. I don't know for sure. It's going to be dependent on what this guy says. Once again, if he gives us 50 basis points, the market's going to rally. I'm very confident about that. If they give us 25 basis points for the cuts, whether or not we get a big rally will depend on if Jerome Powell calls for this new easing cycle. I think it's very, very advantageous for the Fed to do so, and there's a good chance they may just try to continue to squeeze shorts. So that's what my view is for the time being. I want to thank you all so much for listening, so please have a great day, and I'll see you guys very soon on the next one in just a couple, not a couple of hours. I'll be back actually tomorrow to give you guys another update on what I see. I'll be going into more details about Nvidia, on Palantir, and all of the others. Until then, I thank you for listening. Have a great day and peace out.